Malaysia is quickly becoming one of the most popular countries to relocate to. It's highly developed, it's safe, it's got a low cost of living, it's got a tropical climate, it's got great cities as well as nature, and also it happens to have one of the best tax systems in the world. So if you are considering coming here, and especially in the context of the digital nomad visa, which has become very popular, then it's important to understand what your tax implications may be if you do come to Malaysia. So if you're new to this channel, I'm Andy. I've been an international tax advisor since 2014, a chartered accountant since 2018, and I help you navigate the complex world of international tax. So this morning I'm in Kuala Lumpur, one of my favourite cities in the world, and I thought this would be a good time for me to provide insights into the current Malaysian tax situation and how it may impact you if you're thinking about coming here. So first off, it would be important to understand just what is your status under the eyes of the Malaysian tax authorities. And the most important thing to first assess is whether you are a non-tax resident of Malaysia or a tax resident of Malaysia. And you have to do this because they both have very different obligations. Now you can still owe taxes if you're a non-tax resident of Malaysia, but we'll get into that later. So first off, we have to determine, are you a Malaysian tax resident? And thankfully the rules are extremely simple in Malaysia. Basically, if you spend 182 days or more in Malaysia over a calendar year, you will be deemed to be a Malaysian tax resident. So basically, if you spend less than 6 months of the year in Malaysia, you'll be a non-tax resident for Malaysian purposes. So what happens if you are a Malaysian tax resident? Well, you'll have to register with the Inland Revenue Board of Malaysia. This is effectively their tax authority. You'll get a tax ID number, and you'll have to submit tax returns every year, and these are generally due in April, following the end of the previous tax year. Now, this doesn't necessarily mean that you have to pay taxes in Malaysia. It all depends on your income, your source of income, type of income, and any reliefs you might be entitled to. And so, before we get into the more complex areas and the bulk of this video on taxes for Malaysian tax residents, a quick note on non-residents. So, Malaysia still operates a territorial tax system, which basically means they only generally tax income that is sourced or generated in Malaysia. And so that could still mean you, if you are a non-tax resident of Malaysia. You could come to Malaysia, generate some Malaysian sourced income, and then leave, but then technically they might still decide that, this is Malaysian sourced and, you're still taxable as a non-resident. But in principle, this generally doesn't happen, and this is because if you're a non-resident of Malaysia, that generally implies that you're probably a tax resident elsewhere. And so Malaysia has double tax treaty agreements with the vast majority of countries, and within these tax treaties, and I'll talk about these in more detail in other videos, these double tax treaties are basically agreements that countries have together to decide that we're going to have some specific rules on who gets to tax what income, and generally it protects the individual from being taxed twice on the same income. So when it comes to non-residents and Malaysian sourced income, generally speaking, the Malaysian tax authorities are going to assume that you're probably paying taxes elsewhere on that income. It's most likely to be a double tax treaty country, and therefore we're just going to ignore it for our purposes. And so the more important considerations here are really when it comes to the Malaysian tax residents. That's where the real focus of the Malaysian tax authorities will be. So for Malaysian tax residents, people that spend more than 6 months of the year in Malaysia, what is taxed? Well, like I said, Malaysia has a territorial system which is very unique. There aren't many countries left in the world that have this in place. This used to be more common 20, 30 years ago. It was much more widespread. But nowadays most countries operate on a residency-based system, which basically means that if you're a tax resident of this country, you will be paying taxes on your worldwide income. So for example, if you're in the UK as a tax resident, if you're in Germany, if you're in Australia, then basically whether or not your income is sourced from within the country or not, you're going to be paying taxes on your worldwide income regardless. Malaysia is unique in that the worldwide income is not taxed unless it's sourced from Malaysia. So there has been some talk about this potentially ending. There was some amendments and laws and discussions that occurred last year. For now, Malaysia has committed to keep this exemption of foreign income up until the end of 2026 at least. So we'd expect that the earliest they might change this rule could be in 2027. We don't know what will happen after that. They might just continue to push this down the road. But for now, anyway, Malaysia retains this unique and pretty special tax treatment of foreign income. So naturally, this can become a very, very good place to be, especially if you've got foreign investments and income from various countries. So if you're a Malaysian tax resident, you just need to know first off that Malaysian sourced income is taxable and foreign income is non-taxable. So this is really your starting point, and therefore it's crucial to understand which parts of your income are Malaysian sourced and which aren't, because this is going to be the key driver in your ultimate tax bill. So it's then crucial to understand what is Malaysian sourced income. And to help us do this, we should categorize income into three broad categories: passive income, employment income, or business income. So for passive income, it's very simple. The source is going to be quite easy to trace. Let's say you have dividend income from a US company, that's going to be US sourced income. If you've got rental income from a UK property, then that'll be UK sourced income. If you've got interest from a German bank account, then that'll be German sourced income. So with passive income, it really is quite easy to see what is the source. It's basically who's paying the money, where's the profit coming from, and evidently in these cases it is from a different country. There's no real contention there. That won't be Malaysian sourced income. For employment income, it's fairly straightforward too. If you're an employee and a tax resident of Malaysia, then you're taxed on employment income for work performed in Malaysia. And so this is regardless of where your employer is. You could be full-time tax resident in Malaysia, you could be working for an employer who's in the US, they could be in the UK, Europe. But if this is the case, it doesn't really matter in the eyes of the Malaysian Tax Authority. You're a full-time tax resident of Malaysia, you're performing your employment in Malaysia, and therefore they will tax that as regular employment income in Malaysia, and you pay employment income taxes accordingly. So finally, business income, and this includes freelancer income. This situation is much more complex, and this is what we'll dive into. So the discussion on whether income of any person is sourced in Malaysia has always been a very debatable subject. The reason it's been so debatable is because the word source is not actually defined in any of the income tax legislation in Malaysia. And this is tax law which dates all the way back to 1967. With online business models often having a presence all over the world, it's hard to know or hard to even interpret what the source of income is or where that is. And because there's no strict definition of source, we've often had to look at case law to help guide and determine the source of income. Now, in simple terms, case law is a historic record of decisions made by judges in the past. These cases create precedents upon which court cases can refer to in future hearings. So let's say the Malaysian High Court has previously ruled that selling clothing items to Australian customers via an online website which has a Chinese distributor could be considered foreign sourced income. Well, if we have a similar business model, then we can at least use that precedent to say, well, we've clearly also got foreign sourced income. There's been a previous case that's also been determined that said that this is foreign sourced income, therefore so is ours. So case law can be a strong source, but of course this can also be limited, especially as cases often might be old, they might be outdated, and maybe not applicable to modern business models. Thankfully, 2 new sections were introduced into the Malaysian Income Tax Act in 2018, and they were effective from the end of 2018 onwards. And basically these gave more descriptive examples of what a Malaysian business might entail, a Malaysian business that basically generates Malaysian sourced income. Now, a lot of this description actually relates to physical businesses, And generally the rule of thumb, if you've got some sort of physical presence in Malaysia, you could have warehouses, factories, workshops, farms, anything of that physical nature, well, it's very clear that you do have Malaysian sourced income. I think that's never really been highly contentious, so it doesn't add that much in that area. But we do have other things such as a place of management or an office, and this is quite an important thing to look at, because basically, if you've got a full-time office set up in Malaysia, then that is now triggering a place of business which generates Malaysian sourced income. And so you could just have a simple office where it's just you working there, but regardless of how much time you spend there, if you're a Malaysian tax resident and you do perform your work in that office, then you will likely be considered to have Malaysian sourced income. A place of management basically means where the key strategic decisions are being made for your company. So let's say, for example, you run an online business, but you're clearly the key driver of that business. You're making the key decisions. You're managing the company from Malaysia. The place of management is clearly in Malaysia. You're not making many key decisions elsewhere. Well, again, that can create basically the image of Malaysian sourced income. And so it's just important to know where your business is managed, as well as where the office may be or otherwise. And finally, there's a note about if you have an agent concluding contracts on a habitual basis, so either concluding contracts or playing a very key role in leading to contracts being concluded, then again, if this person or if it happens to be you is in Malaysia at the time where that's happening, then again, this indicates a business presence in Malaysia. This indicates Malaysian sourced income. And so an example of that is, let's say you have a business where you're negotiating with clients, you've got all sorts of clients all over the world, but you're negotiating deals whilst you're in Malaysia, you're signing contracts in Malaysia, you're playing a very key role in securing these clients and signing the agreements. Well, this would tick the box of habitually concluding contracts and playing this material role. And so again, this would potentially trigger Malaysian sourced income. So using the law that has been updated and prior case law does give us a strong idea as to what Malaysian sourced income can be. And in summary, when the tax authorities do look deep into these cases, they'll use what's known as the broad guiding principle to determine the source of income. So if you step back, when they're looking at all these details to think, what is Malaysian sourced? Is this Malaysian sourced? They rely on this key broad guiding principle to basically start their assessment. And there's two questions within these principles. So the first one is, what has the taxpayer done to earn the profit in question? And the second one is, where did the transaction that produced the profit to the taxpayer take place? So you have to keep these two principles in mind when you're trying to understand, do I have Malaysian sourced income? So for examples of prior case law which has used this broad guiding principle, we've got an example where a Malaysian taxpayer was selling bus tickets in Singapore. And whilst this person was tax resident in Malaysia, they spent most of their time in Malaysia. They did go to Singapore to sell bus tickets for a bus which was in Singapore, and there was contention from the Malaysian tax authorities to say, we think this might be Malaysian sourced income. But when this went to court, the High Court agreed, and looking at the broad guiding principle, they agreed that this was not Malaysian sourced income because the sale of the tickets took place in Singapore, the contract was entered in Singapore, the money was received in Singapore. And so basically, what has the taxpayer done to make the profit? Well, they've sold tickets. And where did this transaction happen? It happened in Singapore. And basically, this really shows that the broad guiding principle is the kind of backbone. If you can pass this broad guiding principle test, then you've got a very strong case to suggest that you do have non-Malaysian sourced income. Another example is franchise agreements, which were agreed by a Malaysian taxpayer to provide franchisees of a kebab fast food chain with the exclusive rights to the trademark and the operating system in multiple locations all over the world. So basically, again, the Malaysian Tax Authority wanted to prove that this was Malaysian sourced income, but the finding was actually that the franchise fees overseas were received from overseas, as all activities in respect of the franchising activities had taken place overseas. So again, what has the taxpayer done to earn a profit? They've engaged in franchise agreements all over the world. And where did this actually occur? Well, again, it occurred all over the world. It occurred in multiple places. The contracts were actually signed in multiple jurisdictions. It was outside of Malaysia, and therefore there was enough for the taxpayer to basically get the conclusion that it was non-Malaysian sourced income. So to take a few modern examples from my own experience, let's say that you own a SaaS business, you sell software, you own this online business, you sell B2B software to companies in Australia. So you're a Malaysian tax resident, you're running this business, you perhaps go to Singapore occasionally to meet potential clients and customers, and on one occasion you go to Singapore to discuss a contract. In Singapore, you conclude this contract, you sign it, you receive payment for your invoice, let's say into a Australian bank account. So in this instance, the contract was concluded outside of Malaysia, the funds were received outside of Malaysia, and the product was received outside of Malaysia. On the basis of prior case law, you have a strong claim that this is not Malaysian sourced income, because if you look at the broad guiding principles again, the taxpayer has sold software to make a profit, and the transaction has actually happened outside of Malaysia. So it's likely that in this case you would not have Malaysian sourced income. Another example, let's look at if you're a freelance consultant. So let's say you offer services to businesses all over the world as a consultant. You provide these via Zoom calls, which take place in Malaysia when you're there. Or you might provide some written advice. You may prepare reports that you send to your clients. You often work on these whilst you're living in Malaysia. Well, in this case, using the broad guiding principles, the taxpayer has sold consulting services to make a profit. In this case, the transaction has occurred inside of Malaysia. They've agreed to the terms with the client whilst they're in Malaysia, and so the principles are going to determine that this is likely to be Malaysian sourced income. But ultimately, it's really all about determining whether you have Malaysian sourced income or not. The specifics of your situation will be unique, and as time goes on, we'll have much more case law to rely on. But for now, it's just about assessing how your income fits into the broad principles and current law. So this can be a very complex area, and there's often lots of argument and debate about various types of income. And no doubt over time, as tax authorities catch up with the modern business world, we'll probably see changes in laws and how these are interpreted. But for now, it's just important to use the law that we do have and try our best to just understand how we fit into that. Malaysia does still remain as one of the best countries in the world with its tax territorial system. You can get some real tax benefits by investing abroad in a way that you wouldn't in other countries. And of course, it's also a fantastic place to live in. So hopefully this was a useful introduction into the key things that you need to consider if you are going to be moving to Malaysia and how this can impact your taxes. If you've got any questions or want me to expand on any areas further, please let me know in the comments below. Cheers.